issues that were being raised by the Manufacturers Association. Manufacturers has raised a myriad of issues currently affecting the sector that, according to the report, risk driving the sector to irreversible damage if not resolved or at least tamed. Here then are some of those issues we prepared on this quantitative data superworld. Now, the first issue being raised is, of course, the now famous or infamous, depending on which lenses you wear, fuel crisis. Joy Doreen Bira told me to be pronouncing that as fuel. Okay. Joy, there you go. So Kenya Association of Manufacturers says subsidy program has failed. And now lack of fuel is equally affecting manufacturing. But there is a recommendation right there. I'm going to ask the chair later on about it. They now recommend government abandons the subsidy to maintain steady supply of fuel to the manufacturers so that they can be able to meet their needs. We'll be talking about that in a short while. Let's talk about wheat and grain supplies. And wheat supply affected due to invasion of Ukraine. Of course, you know, we get a lot of our chunk of wheat supplies from those countries. And this was affected largely after that attack by Russia. And now Kenya Association of Manufacturers recommends India as an alternative source. We'll be looking at the numbers in India and looking at what prices farmers or what prices the manufacturers can actually procure from India. Let's talk about the financial sector. Now, the US dollar is unavailable. KAM members are unable to actually meet the international obligations and supplies because the base currency, the US dollar, is not there. KAM members are facing challenges accessing the US dollar from their banks. There's a shortage that is, of course, straining supplier relations. Now, there's a call for interbank trading to restore that supply. That was the third issue that was raised. Let's give you the fourth one, which is the second last one. Metal sector. Remember, earlier on in the year, President Uhuru Kenyatta put a ban on the trade of scrap metal. This, of course, is causing a lot of turmoil in the manufacturing world. Building and construction, automotive, energy, among other industries are also affected. Now, the complete ban on scrap metal dealings affecting costs and supplies in the long run. KAM is now calling on the government to incrementally reopen the sector to licensed operators. We'll be talking to Mr. Muchai Kunyia on that one also. But lastly, the finance bill riddled with unfriendly proposals to producers and consumers. We want to also be focusing on that one. Mr. Muchai Kunyia is on virtual. Joining me now to dot the I's and cross the T's on the concerns of the manufacturers is the chair of Kenya Association of Manufacturers, Muchai Kunyia. Mr. Kunyia, good to see you. We'll start off from a general point before we zero in on particulars. In your statement, the opener says, and I want to give it word for word, we are in no doubt facing difficult times occasioned by both global and local factors, and our resilience continues to be tested almost to a failure point. Underline that, almost to a failure point. The question then, Mr. Kunyia, is, are we at tipping point? Is it that bad?
Well, thank you. Good morning, and thank you for welcoming me to your show. I think things are difficult. When we talk to our manufacturers, they are having difficult times. And the challenge about resilience is that you don't know where the limits are. So it's a little bit about walking like close to the edge. And what you want to do ideally is keep as far away from the edge as you can, not get closer and closer to it, because you don't know, like they say, the straw that broke the camel's back. So when we have too many things that are in the air or causing trouble or at risk and a lot of uncertainties in the air, it is best to try and resolve as many of them as you can, because there are going to be others coming up in the future anyway. So you want to keep, and it's a risk management strategy, you want to reduce how many uncertainties there are in the air, because you don't know when the next one comes and which straw is going to break the camel's back. So some of these issues that we listed, and for some different companies, are actually existential at some level. So it is important that we resolve them sooner rather than later.
Very well. Let's now zero in on some of the issues that the association raised, that the association needs the members to be addressed early enough so that we avoid a possible collapse. Let's start with the fuel issue. You say that the government should abandon the subsidy program. Won't this expose the consumer to exorbitant prices and, of course, exploitation? I mean, given the fact that if the government does not absorb that cost, the cost is transferred now to the consumer.
Yes, I think, well, you read half the sentence that we put in there. We said, abandon the subsidy and reduce the taxes. At the moment, which should achieve the same goal. At the moment, the problem is the government is collecting a lot of tax from fuel. If we look at our fuel cost, beyond the actual supply of the fuel, the person who gets the biggest chunk after that is the government of Kenya. So we're saying that the government takes the tax as the fuel is coming in and then goes around and tries to subsidize the marketing companies thereafter. So we are saying this is a complication, and that is what is leading to issues in the marketplace, as our understanding of it is. Why don't we just reduce the taxes as the fuel is coming in? Then we don't have a subsidy issue at all, and therefore the price, if we want to cushion the consumer will be cushioned because the price will be lower. So we can't say we are cushioning the consumer while we are still taxing very highly. And obviously we also have some exposure to global markets, and prices have moved up. So there is, in a free market economy, we need an understanding of what our exposure is to global events, and that our capability to shield ourselves against them is limited because we are a middle-income country. There are some things we can do, but there are limits to what we can do on shielding some of these costs. But what tends to happen is when you try and play with the market, you then affect supply. So we are getting the worst of both situations, where we are getting currently cheap fuel, but you can't find it. Thankfully, over the last weekend or so, supply has improved significantly in especially the big towns. But we know and understand, and I think was reported in your papers yesterday, upcountry is not the same. There are still some places where supply is still constrained.
Very well. Let's go to wheat, which is the second issue. And people have been joking online that biscuit manufacturers rarely complain about wheat prices because they'll just pull one of the biscuits in the sachet. But let's talk about India as a proposed alternative of source market for wheat. What are the production lines looking like? What numbers are we looking at? What's their production and how much can they be able to supply to this market without necessarily, of course, affecting their own consumption locally?
Yes. Well, I think listen to our sector players. The thing about wheat, and it's a fast-moving environment. So in fact, what our request was that we need some speed on these issues from government. Because of the constraints in Ukraine and Russia, which they generally call the Black Sea, there are Black Sea ports that export from there when we get our coffees. Our teas. Our wheat, I'm getting mixed up there. We have a challenge about where are the other options where they're going to get this from. And India is about the only other country in the world that has been exporting wheat recently. Now, obviously, they don't have unlimited supplies. They had a big bumper harvest last year, but they are going to have, everybody is going to be buying that, because the whole world is looking. If we look at places like and so on, other countries who have a huger demand for wheat than we even have, they'll all be going looking for it. So we were saying, if we want to get from India, and even the pricing, these prices are changing on a daily basis. If we do not go quickly, the wheat is going to disappear. There will be no wheat left to export from India. India had the benefit of about 4 or 5 seasons of bumper harvest, so that they are able to export. They've got some volume for export. We have had a long-standing ban in Kenya against wheat from India, I think since the 70s. And that was because of a particular fungus that they had an outbreak there. So we were encouraging government to go quickly, resolve this issue. We need to do some phytosanitary work to check if their wheat is okay, and then start buying from there. It's worth noting other East African countries are already purchasing from India, like Uganda. So this wheat is passing through Kenya anyway. So we can, just move quickly to try and resolve these issues. Yeah.
Great, fair enough. Let's talk about the financial sector. And you mentioned that there is an unavailability of the dollar currency currently. Of course, it's affecting your production lines and meeting international obligations particularly. There is a proposal on your statement about interbank trading. How should this work out in your own view?
Well, what we were used to in the past, and this is not a long time ago, even last year, a couple of months ago, you go to, when you have obligations to pay, whether it is for supplies, for equipment, you ask your bank and your bank will avail for you the dollars and you're able to make your payment at a particular time. Right now, we are having to do a lot of management on that supply of the dollars, so that you find you're having to either, pre-plan for a long time, trying to tell your bank to prepare these dollars, and in the hope that you're going to get them. Most of them are limiting them. And then secondly, which is what we're talking about, the interbank market floating, is what's the pricing of these dollars. So on a day-to-day basis, although we can see the Reuters screens is where you usually get what the exchange rate is today. The delta, the difference between what's on the Reuters screen and what you're buying at is not standard, whether it's from different banks or at particular different days. And that's an indication that the market is not working very well, because ordinarily the Reuters screen would tell you, like an average price, you're going to get pretty close to what's on the Reuters screen and get it pretty easy.
Questions?
Sorry?
All right. So sorry, I cut you short on that one. It's okay. Go ahead. Finish up.
Yeah. So it's not necessarily that, and we think that there are banks we suspect have more dollars than others, and the ability of banks to trade with each other when they need dollars is what kept some sort of liquidity in the market during tough times. Obviously, there's been a lot of demand on the dollars because the cost of commodities, even which we were talking about, the fuel we were talking about, the dollar price of those has gone up significantly, like we're saying. So that means there would be some pressure in there. And that pressure will kind of probably remain for a while. What we are saying is, what can we do to mitigate the situation? Because in Kenya, we don't necessarily manufacture dollars, but what can we do to try and mitigate this situation so that the impacts are not as difficult?
Amazing. I have about 3 more questions to go, so would like to just go fast on these ones. You say that there are some quote-unquote unfriendly suggestions in the Finance Bill 2022. What are some of these suggestions you have in contention against? Yes.
Well, those ones, that is a long program, actually, so it's very hard to summarize them deeply. But in broad terms, we can say this. One, the CS said that we want to protect consumers and mitigate cost rises. But you cannot do that if you are raising excise tax by 10%. These are costs that are going to be paid by consumers ultimately, so it's going to become a big expense. There are other taxes that have been raised, and for us, what we are trying to say, and we put it in our manifesto, we are trying to make Kenya an attractive investment destination. We have, at the moment, coming through a pandemic and all the issues the world has gone through, people are trying to realign their manufacturing sites where they can invest and their supply chains. We have the Africa CFTA coming. So the things we need in our bills are things that are going to make Kenya more attractive for people to invest in. At the moment, we've raised capital gains tax. We are reducing the ability to make interest cost part of your expenses. So the interest cost, the EBITDA restriction is there. We have the taxes we're raising even on DST and so on. So we are just making ourselves less attractive to investment rather than more attractive. So those are some of the key kind of broad terms, some of the areas that we're going to deal with. There are some good things like in the pharmaceutical sector, in the motor sector, some wins in there. And we're saying, yes, when you put in those wins, you do understand what the issues are. You reduce the VAT on import of manufacturing equipment for pharmaceuticals. So yes, let's do that, but let's do it for all manufacturing. Why restrict it just to pharmaceuticals?
Great, and I love the way you're pointing out that 10% tax on some products that remain anonymous up till now. Of course, he will be revealing them later on in the course of the financial year. Let me.
They're there in the bill. They're in the bill. It's water, cigarettes, soda, all of those, the usual. Yeah.
All right, great. Now, in light of all this, if in the unlikely event that these issues are not addressed, what would be the net effect of this on the economy and, of course, the mwananchi and the consumer?
Yeah, that is the unknown. And this is where we were talking about, we are testing our resilience. At the moment, we do know there are a lot of businesses struggling. We do know, there are businesses in whether SMEs or some of the larger ones who've had to close, just given the circumstances they were in and the times they were in. So we're saying, look, we're in very shaky times. So we really need to cushion both businesses and consumers at this time so that we can be able to ride this and prepare ourselves for the next stage. Because I don't think the difficult times last forever. There will be light at the end of the tunnel. There is time for us. But who will be left standing to be able to take advantage of those opportunities? So we are telling government, let's be more conservative around what they spend. And I think the key point here is about how much government is spending, because this is what is making them pull a lot more taxes, is their pretty high expenditure. So if we can rein in some of the government's expenditure, we would then be able to cushion all of us. Because if all of us are having to adjust our spending, we think government too should be able to adjust its spending downwards so that we can survive through this period.
Next line of action, would you want to now maybe involve intergovernmental agencies in addressing some of these issues you've raised? What would be the next course of action?
This is our line of action. This is part of it, actually. We are trying to make the world understand, so consumers, policy makers, they can understand what we are saying. We've got meetings lined up. Parliament has asked for some public participation. Industrialization with people in treasury. So we keep beating this drum. And our thing is, our work is to keep beating the drum, try and get people to understand what the issues are, where the situation is, and also propose some solutions, because it's not just about saying this is a problem. We're saying there are solutions to this. Can we have the discussion around the solutions that will help us get through this situation?
Amazing. We have been speaking to Mr. Muchai Kunyia, who is the chairperson of the Kenya Association